Record. All right, Georgina, do you want to introduce Matthew here from Home Run Financing?
Hello, everybody, and welcome to our TST Pros Thursday training series. Um, we attempt to do this every Thursday. There are some conflicting of schedules, but we have the honor of having Matthew Reagan here with Home Run Financing, which is the PACE loan, and he's going to discuss with us the benefits of PACE. All right, Matthew.
Thank you, Georgina. Hello, everybody. Welcome to rainy Thursday in Southern California. That's where I'm located. So if you're in Southern California and you want to meet up, feel free to call me. If you remember anything on this presentation, because I tend to put out a lot of information in a short period of time, which is great. It's recorded, so you can kind of go back to it if you didn't understand something. Feel free to call me. I have an open line. I answer the phone calls at all times. And that's the most important thing you have to remember, my phone number. Put it in your phone and call me when you need help. I will actually do it online, or you can call me while in home. If you're not in home and doing it remote, you can call me on the line with the homeowner or give them my number. That's fine as well. And I can explain it better if you're having a tough time explaining some of the benefits. Okay. Here's my pertinent information. You have my phone number, my email. Louis Bazan is my contractor support agent for all my contractors. I have 100+ contractors in my portfolio. So feel free to call him if I don't answer. If you're actually physically in home, I know that's important time, and your time's short. Definitely, if I don't answer, text me and say urgent in home. Usually it's not urgent if you're not in home. But do that and I will drop what I'm doing and answer or give you a call back. Okay. But there's his information as well. Okay, let's move it forward here. And we're going to go ahead and talk about done with home run financing. And we're going to talk about PACE loans, right? And PACE, they've been around about 13, 14 years now. So everybody's pretty familiar with them unless you're not too familiar with financing and you're kind of just dipping your toes in it. It is not unsecured financing, it is a secured financer. That's the big difference, right? So we'll talk a little bit about the differences between our financing and other financing. You're unsecured. What are some of the more popular ones you guys are using out there? Spencer, Georgina, what do you guys use for unsecured?
Right now, Good Leap's huge. Obviously, Sonova fell off a bit from recent developments. Light Reach, Good Leap.
Now, Sonova was a not traditional financing, right? That was
Mostly for TPO and lease. You're right, but I mean, yeah, so mostly for unsecured, it would be Good Leap and Light
Good
Reach,
Leap. Great,
or
great. So
yeah.
right. So most of those financiers are going to work by FICO score, right? FICO score and debt to income. We're not that. We do pull credit and we pull credit of everybody on title. So if there's two, three people on title, they'll all be part of that application. So keep that in mind. But remember this, if anybody kind of is nervous about getting their credit pulled, this is a soft credit pull all the way through. Not some people say soft credit pull. It's just at the beginning when they fund, they pull a hard credit pull and it costs points. Ours is soft all the way through. And one of the main benefits, and I'm kind of jumping ahead, but because it's part of what I'm talking about, is on our when we do a soft credit pull after the fact, it doesn't show as debt against your credit report. So that means you can go out the next day after doing a loan with us for 50, 60,000, and you can get new credit cards, a new loan, buy a new car, and all they do when they pull your credit, they're going to just see a soft credit pull for home run. That's it. They won't see the debt. Why is that? Because it's a property tax. So FICO score doesn't matter to us. We look at other things like mortgage payments, making sure you're paying your mortgage. We're looking at things like property taxes. That's how we collect our money. So we're looking at your property taxes. We're making sure you don't have a bankruptcy currently. You can have one, but not one recent. So things like that. And we'll go more into that in a minute. But it's done through your property taxes. Property assessed, clean energy. That's the acronym. Property assessed. It's because we look at the property. We look at the value first. Then we look at the equity because this is an equity product. You have to have the equity to cover the loan, right? And then lastly, we're going to look at how much you make. Do you make enough money to pay our tab monthly? Right? We state it in the application, and then afterwards we send in something to prove what we state, and then we get a good read on whether or not you're a good candidate. Clean energy portion of it is what we do. We do anything that saves energy, makes energy, saves water in California, and seismic retrofitting, foundation work in California as well for earthquake. So there's a water and earthquake issue in California. We try to take care of that, right, in our financing. So that's pretty much everything you do, batteries, solar system. What is there anything else that I'm missing that you guys
I mean,
may?
eventually they might add like HVAC and insulation. Would insulation be something covered?
Yeah, we're covered on attic insulation, wall insulation.
I know
We
you
do
have
everything to do
HVAC.
with
Yeah.
the and a reason I think it's important to kind of mention some of the other things we do is maybe you don't, maybe you're in the house and maybe you're talking to them and they mention, hey, I'd like to do this and this. If you have the means to bring another contractor to me and sign them up, by all means go ahead and do that. So maybe you can get a piece of that as a salesperson selling that deal. Um, please tell them about the fact that they can use the other money that's available after they do your solar, right? You want to do your
Yeah.
solar pitch first. But if there's more money available, by all means, bring them over. I have a network of contractors, or you can bring a contractor to me and we can sign them up,
Mhm.
right, to do that product. And we do anything in the yard, landscaping, concrete, astroturf, DG, things like that, pavers, anything in the yard landscaping wise. We do anything that has to do with the envelope. So windows and doors, paint, cool wall paint, insulation, HVAC, obviously water heaters, repiping, rewiring a house that may come into play with a solar system. We can rewire the whole house, obviously main panel upgrades, things like that. Okay.
I didn't know anything about the water, so like anything that's drought tolerant, they'll cover too, pretty much. If you want to put drought tolerant landscaping.
Yep, yep, exactly. And anything to do with piping, right, in the home,
Oh, yeah.
because you're, controlling the flow of the water, right? So we can't do bathrooms, but we could do toilets.
Yeah.
We can do the faucets. We just can't do cabinetry. We don't hang walls. We don't do
Yeah.
flooring unless now I take that back. We can do insulated flooring. We can do insulated garage doors. Anything that saves energy in a way. There's a valid reason
Yeah.
to finance it, basically,
Uh-huh.
right? But I digress. We're kind of going into another avenue. But once again, just wanted to mention that paid property taxes, that's the most important thing you have to remember about this. And honestly, we're not everywhere. PACE is not everywhere in California. We're in California and Florida only for PACE loans, residential. In California, every community has to vote basically to bring us in. Okay, so we have an eligibility search, a know before you go, if you will. If you are not in our system, let me know. Send me your information. Contact me, and I will put you in a power system so that you have a portal. Once you have a portal entry, you can just check any address in California, and it'll say yes or no. If it's no, if you're farming that area, we might have a conversation about that. Hey, are you going to bring them on soon? Or could you ask them to work on this area, this community? That's great. But most likely, if it's a no, you'll have an X when it comes up, a red X. No reason talking about it with the homeowner. It's not coming on anytime soon, right?
Okay.
So check mark is what you want to see. It's eligible when it pops up, and then we're good to go. You can talk about it. And actually, I like using that as kind of I talk to contractors as using that as kind of a sales driver, if you will. When you're in home, you say you might a good thing to do is know before you go in there that hey, they're good to go. But use that as a pitch, right? When you're in there or when you're talking to them on the phone. Hey, I have this type of financing. It's not even technically a loan. It's a property tax. It's an alternative type of financing, has a ton of benefits because it's a property tax. I'll tell you a little bit more about that, but let's look and see if we can even offer it. I don't know if I can offer it to you. And of course, they're going to go, well, what do you mean you can't offer it to? Well, I'm not sure if it's in your area, but let's check. Let's check real quick. right? You're piquing their interest. Scarcity drives business, right? When people hear that they can't get something, they want it.
Yeah.
So you kind of pitch it that way, and they go, oh, okay, well, all right. And they're kind of thinking their wheels are turning like, why can't I get it? And then you check and you already know, but oh, hey, I just pulled it up and it says we're good in this area, which is great. We can talk about it. I'll tell you a little bit about it. And then let's put in an application. It's a soft credit pull. If you decide it's not for you after the fact, we get approved and you decide you can get something better, by all means, go for it. We can cancel, but let's get you approved with somebody right now so that we know we're covered so we can build the system,
So
right?
what's like the eligibility requirements? Like, is there a map that you can search for eligible areas, or is there certain cities or?
Oh, yeah, you can go to our website, homerunfinancing.com is
Okay.
our website, and any homeowner can go to that. That's really homeowners, but it does have I can send you guys a list of communities, but you can always go to our website and kind
So
of do
why
it. Like I
why
said, if you're
wouldn't?
farming areas, it
Yeah.
makes sense to go to the website
Yeah, yeah.
and look at the towns we're in, right?
Okay.
Because it tells you that.
So what, like, why isn't it not everywhere? Like, what disqualifies?
Because they have to decide for themselves. And some communities don't want it. The more
Okay.
affluent communities feel that it's really built for people that have poor credit
Yeah, I know, like a
and
last chance
and you
opportunity.
know what? It is built for people with poor credit. But the smart people, let me put it this way, guys. I have two of the most expensive places, not only in California, the most affluent areas in California, but on Earth. Newport Beach, Rancho Santa Fe. Well, actually, Beverly Hills is probably thrown in there too. I have LA,
No.
I have all the way up into Northern California, right? California is one of some of the most expensive places on Earth, right? But guess what? I get business for those from those areas. You say, how's that possible? This guy has we pull up the property, look, $8.5 million. $12 million. Why are they using us? Because you'd be surprised. Some people have tax or have issues with their credit, right?
No.
Even people that have money have issues with credit, or they realize what it is and the value of using it. And I'll tell you a little bit about that when we go into the benefits here. Okay. Before we go into the benefits, um, just want you to know that you can also be comfortable telling people that this is one of the most secure loans out there. We're right underneath a mortgage, right? And they'll see because you have to go through a little bit more effort, right, to get the loan in than you would with some of the unsecured out there, where maybe press a button and 10 minutes later they're telling you, hey, we'll give you 25,000,
Mhm.
but it will be at a high rate, right? Even if you have great credit, you're probably going to end up paying more if it's the higher the amount, obviously, the more secure they're going to have to make it. But um, with us, we do a welcome call and we do a closing call. Everybody has to do that. Every project that we do has to do that, but only one person has to do it. It's not like if there's three people on title, they have to surround the phone and all be a part of it. One person has to do the welcome call. One person does the closing completion call. Okay, it's on a recorded line that protects everybody, right? When we send out documents, it goes to everybody on title. They have to all sign it. And then everybody on title, those same people have to press that the project is done. Okay. Now we are going to be changing that. We're going to be setting it up so that one person can close it and we won't need everybody to close it. Um, that's being worked out with IT, and it's going to be coming back to where we have a one person close on the button. So that will change in the next month. But for right now, it's still the same where everybody who signs it will sign it at the completion as well. Okay. We also do our inspection is pictures. We do True Pick. We send it out. I know that with power, a lot of times they send it to the homeowner and have them take pictures. You could do it that way. You could take the pictures. Somebody has to take the pictures. If it's over 25,000, we require pictures. Okay. Now, we also require a permit pulled, right? But if you get a final permit, we wouldn't require pictures. Now, we don't need a final permit to fund the project. We just need the permit pulled and the pictures, right? So, like I said, I know with power, we've used the homeowners to take pictures sometimes, or send out a runner, or somebody if they're in their area, they take the pictures. whatever needs to happen. I'm a big fan of talking, being in touch with the installer, whoever's the installer is. If it's a sub, that's great. And just saying, hey, when you're finished with this project, call us while you're on the roof so we can send you the link and they can take pictures. But there's a link. It's called TruePic. Send it out. It geolocates. Anybody can take the pictures because it's geolocated. It doesn't matter.
Okay.
Okay. Okay, so now let's get into the benefits. Okay, we talked about the strong consumer protection measures. Um, we talked about the pace. Pace isn't doesn't matter about the FICO score, right? We don't care about that. And that the balance, number one, to me, the number one benefit. And if I was writing them down, I'd write down 3 or 4 benefits. There's more than that. FICO score isn't really a benefit. That's a feature of the loan, right? We don't need to see the FICO score. Um, the biggest benefit, I think, is the balance, right? Not showing on the credit report. And like I was saying, these people who have a lot of money, they do a $150,000 loan with us. Guess what? Doesn't show up the next day when they go out to get another loan. That's really important to them. And that should be important to any homeowner, right? That they're able to get other loans to do other work if they want to do that. Lowest payment factors available. This is a little dated. I'll be honest with you. Are we the lowest out there? No. Are we low? Yes, we are. The base price is very low. If you get approved for us, you can have a 400 or 800 FICO score. Doesn't matter. As soon as we say you're approved, you're given a 9.49. Okay, so 9.49 is the starting rate. If you want, and I know with solar, you tend to want the lowest rate possible. I get it. We go down with homeowner buy downs. We do not have dealer fees. It is exactly the same idea. The difference is you're not rolling it into the homeowner's price, your contract price, right? You're not rolling it in there and presenting it as a contract price. So thinking ahead that way, that's how I would pitch it to the homeowner, right? I'd say, hey, normally what I would do is I would just your price instead of 40,000 would be 50,000 for this loan because I'd be rolling in the homeowner dealer fee into your price as a contract price. But instead of doing that, it's the same thing. We're just pulling it out and it'll be a fee in the financing. So it'll be separated. But it's essentially the same thing. And it'll lower your payment per month,
Yeah.
right? So that's kind of how I would present it, just because, hey, that's the best way to present it, right? To give them, to be honest with them, say, hey, normally I would just roll it in and
Yeah.
we present it that way to you. And they go, oh, okay, I see. So it's the same thing. You're just separating it as a fee within our financing. Now, remember this with PACE loans, the way you guys work it with Power, you're not using your whatever system they're using now. What are they using over there at Power?
I mean, for uh proposal.
To set up your build, what are you guys using,
I mean,
right?
Vision, there's
Yeah,
solar.
are you using Vision? So you would use Vision to do a cash build.
Yeah.
Yes, you would do it for that, right?
Okay.
But our you're not going to quote anything out of Vision because you're taking that cash price and you're bringing it to our portal.
Yeah, so we got to come into your portal. Yeah.
You're going to come to our portal, you're going to put in that cash price, and then we have fees and interest that are rolled into the loan, and there may be a buyer fee or a buy down fee as
Mhm.
well, right? Rolled into the loan. So that's all rolled in the loan. Then we kick out your number, right? You're going to have a number. We'll give you one number. Let's say it's $400 a month. That's going to be your number for the next 30 years because we can go out to 30 years on our loans. You can give them a secondary number but it will not be in our financing documents because ITC is a federal, rebate. Whether or not they're going to get it, we don't know.
Yeah.
So we do not present it in our loan docs. So you will present one number, it'll be the 400, but you can talk about, because in our calculator, our proposal tool, you can put it in there and you can go in and you can add the ITC and it will give you that second number, right? So maybe it's 275 instead of 400 a month.
Yeah, because then if they get the ITC, they can just re-amortize.
Correct. And that's your pitch, right? That you're Mr. and Miss Jones, we're going to allow you to reinvest. You can take your ITC and reinvest it. And actually, with this loan, we'll go ahead and kind of lead into that. That's what you would do in the first year, right? You'd reinvest it, and you get a lower payment. But guess what? You don't have to stop there, Mr. and Mrs. Jones. You can, with this PACE loan, because it's a property tax, they do a free reamortization every July. So if you want to make extra payments towards, so you a $50,000 loan, say you want to, you put in your ITC of 15,000, whatever it may be. So now it's a $35,000 loan, and you're in your second or third year, and you decide, you know what, I want to keep paying this down faster than the $275 payment a month. You're welcome to do that, but it's got to be over $2,500 when you do it.
Okay.
You would call Home Run and say, hey, I want to put $5,000 more towards the principal. You can do that. And then the following July, after you do that extra payment, it's going to re-amortize. You're going to have a lower payment again. So you can do this continually year after year to where you pay this off. And it's good to tell your homeowners this. It adds, you're obviously building rapport, and you're showing them that you care, that they don't have this hanging over their head for the next 30 years, and they're paying off as fast as they possibly can. Right?
Yeah, yeah.
So remember that they can do it. It's got to be over 2,500. Could they do it lower than 2,500? They could, but then there's fees associated. We don't want to talk about that. So we don't ever even, we just
Well,
say
I mean, it's
pay
probably not worth their
2,500 and more.
time. They're not worth their time if they're not doing the 2,500 at least.
It's not worth their time. Exactly. Yeah, it's not like a regular loan, because this is technically not a loan. It's a tax assessment, right? It's
Right.
going on your tax bill. And remember, you can talk about that all day long, because that's why there's benefits associated with it. These benefits wouldn't be here if it wasn't a property tax, right? So we
Well,
can
yeah, I
talk
mean, for
about the tax deductibility as well.
yeah,
That's so far as my big ones I have, right? We have tax deductibility. We're going to have that it doesn't show up on your credit report, and then the fact that you can pay it down and it will lower the payment. The payment is fixed, never goes up, but it can always go down,
yeah.
right? That's going to be one of the top ones as well. Tax deductibility. Remember, this is a little bit of a gray area because you don't know their personal tax situation, right? You don't know their tax appetite. So you can't say, you can deduct it. All right. Best way to pitch it, and you can't really give them an amount, right? You can say that I know that you're allowed to at least try to deduct the interest on these payments. These payments are long-term loans. They're heavy on the interest at the beginning of the loan. If it's a 30-year loan, for the first 15 of it, you're talking 40 to 50%, right? As it slowly works down to mid, and then it goes lower as you get into the back end of the loan, right? So they're going to be able to deduct probably near 50% of the property tax. At least try, right? How does it normally work? Well, the CPAs, the tax consultants, all they do is take your property tax number, $10,000, and they put it into, or whatever it may be, and they put it in their algorithm in the computer, and it does it for them. So they don't even technically know what you're going to get as far as deductions. Are you going to get deductions? Most likely, yes, because there used to be a $10,000 ceiling. The last 4 years, it went away at the beginning of this year. So there's no ceiling on property tax deductions again.
Okay.
Is this only for primary? Can this ever be used for a second home or investment property?
Yep, you can use it for all your properties. I've done six homes at once. I've been doing this for almost 9 years. Worked at another PACE company before this for 6.5 years, and with the Home Run for 2.5 years. So,
Actually, hey, can you do LLCs?
yep, we can do businesses. We can do multiple homeowners. On the businesses, that's a what if situation. But yes, we can do businesses. As far as knowing what they make, we're going to have to use business bank statements or whatever to show, and we'll have to probably see something showing that they own that business, right?
What if it's a nonprofit?
Nonprofits most likely no, because they have to have a property tax bill.
I mean, they still do. So Jordan, that's on here specifically, they've worked with a lot of rehab centers on getting solar, and we've done them through. Well, we did some through Sonova.
And you're talking
But
residential, right? Yeah, because
no,
we do
well,
commercial.
yeah, they're zoned resi. They're zoned residential properties, but it's owned by an LLC, which is a nonprofit, and they still have a property tax bill. They still pay their bills. I mean, they show money coming in. It's just not profit. And so that's an issue that we've ran into, because Jordan and Melia on our team are running a lot of deals for these nonprofits that are basically sober living facilities.
Yeah, most of those fall, whether they fall residential or not, they'll look at them, but they'll probably come up as commercial. So,
Hmm.
because I used to do commercial base quite a bit too, so I've done quite a few of those. But once again, that's a what if. We'll play with it when it comes out. We can take a look at it and try one out and see if we can get it through. I mean, it hasn't come up since I've been with this company, but with my last company, I used to do those. So okay, so we'll give
Okay.
it a go. I mean, like I said, let's try one.
What did you say, there was a specific DTI, or there wasn't a specific DTI threshold?
There is. I'll go into that in a second. Let's stick with the
Oh,
benefits first,
sorry,
and then we'll look
yeah.
into that. Okay, so tax deductibility, once again, that's one of the top ones. And one of the ones that's not even listed on here that I think is actually one of the top ones is the fact that because it's a property tax, there's always going to be a deferred time to the first payment, right? And it
Mhm.
depends on the time of year. So what does that mean? The beginning of every tax year, property tax year starts July 1st. So we're coming up to a new tax year. So right now, it depends on how you pay your property taxes. Two-way to pay property taxes, right? If you own your home outright or you don't impound, you pay twice a year. December 12th, April 10th, you're going to make two 6-month payments. We actually go right on the property tax bill, guys. So, don't misunderstand that. We're not separate. We're part of the property tax bill. We will be a line item on their new property tax bill when it comes out in the next November.
Yeah, so you have to warn people if they get like a supplemental if they don't put on their impound properly, or
But no, no, when it will automatically impound
okay.
eventually. But here's the way it works. If you have an impound, which about 85% of the people out there have an impound account. So when they take on a PACE loan, so say you take on a PACE loan today, you're about 4.5 months till July 1st. Technically, your first payment is due the beginning of the next tax year. That's the way PACE works. But because you have an impound account, you have a choice. If you want to start paying immediately month to month, probably a month before July 1st, so June 1st, the homeowner, and we'll tell them about this. You tell them, I tell them, everybody will tell them, but they'll still kind of forget sometimes. But that's okay. But they have to take a picture of their closing statement from us, which is a 1-pager, snap a picture, you send it to their lender and say,
Yeah.
start charging me that $400 a month. And the lender will start charging them $400 a month in July for their first payment when they get their mortgage. It will be tacked onto that instead of $2,000 a month. Now it'll be $2,400 a month for their mortgage payment, right? And they will start paying that month to month for the next 30 years. That's one of the options. So they have the option to, hey, I want to get it going right away and start paying month to month. Great. You're welcome to do that. Contact your lender, let them know. The reason they have to contact them, guys, because the lender does not see the new tax until when? November, because that's when the new tax bill
Well, that's
comes.
what I was gonna say. If they don't tell them,
Yep.
then they're gonna get hit with a
The
supplemental.
lender doesn't know anything about this. If they call them, we get calls all the time. Hey, the lender says they don't know anything. Yep, we told you that, but we're not going to tell them that. But we did tell them that the lender won't know anything about it because they don't get the bill until November. That's when the new property taxes are paid 6 months retroactive, right? They start July 1st, but the bill doesn't come till November to be paid on December 12th,
Yeah.
right? So the way to work it the second way is you defer and you just wait. You wait till November, you'll get your tax bill, and you pay a balloon payment of 6 months minimum. We state in our contract that the worst possible scenario is pay the whole thing at once. So we tell people to pay the whole thing at once. Do they need to? No. They need to pay half of it because that's what's due by December 12th, right? Half, so 400 times 6, right? $2,400 will be due on just before December 12th, so late November. The next half would be due by April 10th. Most likely with most mortgage companies, once you make that chunk payment, the half payment, they will automatically tack on that monthly payment in January because now they know about it, right? So they will actually tack it on and start charging you that $400 a month after you make the bulk, 6-month payment. So you have a choice. You can pitch it. Best time to sell a PACE loan is going to be July 1st. Why? Because you have 12 to 18 months till your first payment. So, guys, if you can't sell that as a part of a pitch, something's wrong, right? That's a great way to approach it July 1st. Before that, it's going to be less because it depends on where we are in the year. In this particular case right now, we're at about 4.5 months to your first payment, or 10 and a half months because they can defer and wait till November to make a 6-month payment. So essentially, guys, they're saving up the money on their own. It's the same thing as if they started in July, they'd be making their $400 monthly payments. Or if they didn't and they defer, they'd still be putting aside that $400 monthly in either a separate account or in their own account, ensuring that they have 6 months to pay at the end of the year. Does that make sense? Do you have any questions?
Do you have any
Yeah, no.
statistics on what a homeowner prefers? Like if,
You
I
know what?
mean,
I would have said a year ago that, and before that, always they defer. Right? They want to wait till the last possible minute and put away that money on their own and then just pay a chunk payment. As of late, it's changed because the economy's changed, right? People want to know that they're paying towards it right away and that they don't forget to make their payment, right? So now I think more people want to actually, hey, I need to contact, I'm going to take a picture of that closing statement, send it to my lender right before July 1st, and let them know, start charging me my $400 a month. So lately, I think it's probably 70% are actually wanting. And like I said, I think that has to do with the clients that we're getting right now and where the economy's sitting, inflation, the rates are higher, right? It just has to do with that.
Yeah, people are starting to become more financially responsible.
Right. That's exactly you took the words
I
right
don't
out.
like the big balloon payment, so I like it impounded.
Right, right. I mean, I would do the balloon payment just
Yeah.
because I like that. I would like to wait,
Yeah.
at least for the first payment,
Yeah.
wait till the finish, right? But
Yeah.
I get it. People are a little more conscious of paying right away. And they still are asking, when do I get my pay stub? Or when do I get the chit that tells me to make the payment? It doesn't work right like that,
Yeah.
guys, right? The payments are done through property taxes. So everything shows up on a property tax bill. So it's on them to make that effort, right? If they want to start the payment early, to contact their lender and let them know, hey, here's this new loan, this new tax assessment. It's going to be on my tax bill, but you didn't get my tax bill yet. But here's what it's going to be. So can you start charging me so I have the money in my impound account? Doesn't matter, honestly, if they put the money aside. The impound accounts, the mortgage people are very good about this. They'll just say, hey, you'll get a notice saying, hey, your slight $500 or 500, 2,000, whatever it may be at that point that you're missing in your impound account. But hopefully your homeowners know, because we've told them multiple times, put aside that money if you're not sending it to your lender, okay, on the impound account. So remember, most important benefits, it doesn't show up on your credit report, possible tax deductibility, a deferred time to your first payment, and then the reamortization. You can pay it off as fast as you want, no prepayment penalty. Those are really the four big ones. Okay. Other ones are more features alone. You'll probably kind of figure out some as we go along. Obviously, no FICO score matters. The fact that it's how do we figure out how much we can loan? We loan out to 200,000. That's a feature of the loan, but it's a benefit, right? Huge amount. Will they get 200,000? No, because if you take in the fees, and if you're going to do a buy down to dealer fee, we go down to 599. By the way, that's our lowest right now. I don't see it changing. I thought it would going into the new year, but right now, I just heard the feds aren't looking at a possible drop in rates till possibly September. So the rates are probably going to be where they are for a while, right?
Yeah.
But we go out to 30 years. I know a lot of your lenders don't, right? They go to 20 or 25. So we go out to 30 years. You can get a 599. You can get a pretty low payment, between using those two. And guys, remember, we we say that we have some of the lowest, yeah, it was a little dated. I think I had it on the last one, lowest payment factor available. That's a little dated. We used to have the lowest payment factors out there by far, but things have changed, right? We still have some low payment factors if you take into the fact that you can do a buy down and the possibility of tax deductibility, because that's going to take away from what you're paying in interest, right? If you have a 599, but you're getting tax deductibility of your property on your property tax payment, well, guess what? Maybe it's a 299 now or a 199, or maybe even a 0.99 because you're saving that money every year in tax deductions. Okay. So we go out to 200,000. It's based on 15% of the property's value. With $1 million home, which isn't out in California at this point, you're looking at probably about 125 available. There's fees and interest, right, rolled into that. So maybe you'd have 110 available for you, or 105 or something like that, because it incorporates the fees and interest in it. So on a 200,000, you could probably have 186,000 with the fee available, 188, something like that, because we got to leave room for those fees and interest. Okay. Terms up to 30 years. That depends on what we're selling. As far as improvements go, I always tell a story about I have contractors that do landscaping, and it's only 20 years on almost everything, and they want a longer term. You can get it. You add a window, one window, 30-year term. Guess what? Now you have a 30-year term for the whole loan, and you can have a lower payment for the homeowner, right? But in your case, you're doing solar, roofing. Those are all 30 years. Batteries are not, as we know, those are 15 years. So if you're doing batteries alone as a project, we're not going to be able to get a 30-year term unless, like I said, there's tricks, right? Trick would be, hey, some people even do it free. They're going to tell you what, can I change this window out for you? We're going to add it free. You're going to get a 30-year term. Now your battery gets a 30-year term, right? So little tricks of the trade. Quick and easy paperless process. We do have one paper that isn't paperless. Everything's done through DocuSign and email. If somebody does not have an email, please do not make an email for them, or even if they're going to make one for themselves immediately, we check the emails, and if they have not been used on the internet, we have view of that, whether they were used on the internet at any time. They won't let us use it. So basically, if they don't have a email, use somebody that they trust, right? If they don't have a trusted friend, hey, that's not a problem. We'll put in no email to get the project started, and then we will FedEx everything overnight and do it. It will have to be, wet signed in front of a notary. You can bring a notary there, or bring them over to a mailbox, etc. Staples, do a notary in front of a notary, whatever it may take, and then we would just FedEx them back. So we can do it. Nothing's going to hold us up from getting a project in. But preferably, we use the paperless process at the end of every deal. If you're sitting in home, a lot of you may not be sitting in at home, so hopefully the homeowner has a printer. Some don't. They will have to go to get this item printed. It's a one-pager. It's very easy. It's called an opt-out form, and guess what? It's because California requires it. It's a formality. It states, homeowner, you're okay doing everything through email and DocuSign, which they're already doing. So it's kind of silly, but it's required. But it's they print their name, sign their name, date it, and they snap a picture and send it back into the email that's on the document. So real easy to do, but homeowners have to have a printer, or if you're in home, you carry a couple, print out a few, carry them with you, and hand it to the homeowner. I think most of your people do remote, right? Sell remotely.
Yeah, pretty much.
Pretty much, yeah. So hopefully we're gonna, homeowners are gonna have a printer. At the very worst, their homeowner would have to just print it out real quick with somebody, and then, or send it over, text it over to a friend that has a printer, or whatever they may have to do.
Yeah.
Okay. No prepayment penalties. We talked about that already. 2,500 is what you want to use you can do that multiple times a year too, folks. So you could do the ITC at 1 year, and then the same year you could pay another 5,000 out of your bank account, whatever it may be. And then it's going to all combine as one one mass payment, and it will go towards the principal, and it will re-amortize in the following July for the new tax year. Okay. This one we can skip. Here's some pertinent information for us. This is our contractor support number. I'm going to make sure I send you guys all our key documents. We have a 6 steps NTP that they can follow along when they're doing a loan on the phone remotely. Makes it real easy what to do and who to talk to and what emails to use, everything. It's real easy. Okay. So I'll make sure you get that. But for the first 2 or 3, go through me. Call me. You have my phone number. That's the most important, right? And that's at 858-220-3823 at the beginning. Call me, Matt, and put it in your phone, Matt Reagan, like the former president, and call me and get me involved. Okay. Here's our hours. Our hours are extended in California, 6 to 9, 7 to 8 on Saturday and Sunday. Email. This is the email that you will use once you submit the application. This email is where you send any pertinent documents for STIPs. Okay, conditions, right? What would they ask for? Most likely, if you have multiple people on title and one of them's deceased, you're gonna probably be ahead of the game. You would ask for that death certificate, snap a picture, send it in, because we have to clear them off the title, right? That's how we do it. Sometimes we ask for mortgage statement. That's about 20% of the time, maybe. Why do we ask for mortgage statement? Because we pull their credit and they didn't report, their mortgage company lender did not report to the credit bureaus. They're supposed to, sometimes they don't. So we'll say we need a current mortgage statement. Why do we ask for that? We need to make sure they're paying their mortgage. That's one of our key indicators whether or not we can give you a loan. And that's going to come up here in a second. I'm going to show you. Text me your info if I don't have it. I can have you in my phone. That way, when I talk to you, I can talk to the homeowner, be comfortable talking to them. This is really for people in home, mainly because when you're remote, you're going to call me first, most likely anyway. But go ahead and text me that info. If you want to get added to the portal and you're not added yet, text me your first, last name, a power. You can put TST on that, right? But I'm going to need your email and your phone number and your full name so I can put you in our portal. Okay. This is on here because a lot of people used to sell this loan as a government loan. Guys, it's loosely tied to the government. Do not use the government in your pitch when you're talking about. Just say property taxes with the county. That's it. You don't use the word government, because if you say government, they're gonna use that as when they complain about not being able to afford their payment when their payment comes, and they go, "Oh, I'm surprised I paid this." People go in shock, right? And decide, "Hey, what's this? Oh, well, hey, it's a government loan. You told me it was a government loan. I don't have to pay it." No, it is not a government loan. It is a loan. Technically, it's a property tax, right? We are loosely tied to the city of Anaheim, let's say, Mr. and Mrs. Jones. They allow us to be on, there's a private lender to be on as a property tax, which benefits you in these ways. And then you talk about the benefits, right? That's how you pitch it. It's a property tax. So we're loosely tied to the county. The county allows us to put it on as a property tax, which is going to benefit you. Here's how it's going to benefit you. And that's when you tell them the 3 or 4 benefits that catch their ear and they go, "Hey, that sounds like a great idea. I like it." Right? And that's kind of how you bring it to their attention. But don't say, "Hey, the government's involved," because they think it's like government cheese. It's free. It's not free. They have to pay it back. And it's a property tax. They have to pay it back even more. And that kind of reminds me to tell you about the length of loan. Some people go, "Oh, I'll do a 15-year," but they have the option to do a 30-year because of what they have on their contract. Always tell them to take the longest term. Why? Because it's a property tax. Do you want an $800 payment or a $400 payment added to your mortgage as a property tax? You want to take the lower payment, and then when you're comfortable, make those extra chunk payments towards the principal. Guys, yeah, they're going to pay a tiny bit. When it's all said and done, they'll pay it off in 7 or 8 years, and they paid a tiny bit more. But for peace of mind, because it's a property tax, it makes a whole lot of sense to take the longest possible term and the lowest payment possible. Probably don't have to tell people as much on the solar side for this, but I like to throw that out there because I get people online all the time and I tell them that and they go, you know what? You're right. Why am I doing a 15-year? Take the 30-year. I'll just pay chunk payments when I want and bring it down as fast as I want and pay it off early. Most people pay these loans off in 5 to 6 years. And you could say a high percentage, 90% or more, pay these off. Why? Because people sell their homes or refi within 5 to 6 years usually. When you sell your home, most likely, can you transfer it? Absolutely, you can transfer this loan. It is transferable, but most people negotiate it out in the sale and pay it off. Refi, can you can it transfer over to a refi? Yes, that depends on the mortgage company that's doing the refi. Most likely, they're going to say, hey, let's roll it in or pay it off in the loan. Okay. By rolling it in, they're paying off the loan, right? So it gets paid
Quick
off.
question
Yeah.
on that. Just because a bunch of us on here are actually real estate agents as well. The
Mhm.
transferability aspect, is that a guarantee? Because obviously it's a lender, loan that the lenders guarantee it's transferable, or is it kind of up to lender discretion?
It's up to the lender buying the home. Yeah. So if the homeowner comes with cash, they can just say, yeah, bring it on. Or no, I don't want it. And
I mean, yeah, if they're
let's talk
qualifying
about
for
the
the
price.
house, they
But if
should
it's a
qualify.
lender, yeah, the lender has that option.
No.
The lender can say, yeah, I don't want to work with that PACE loan. Or the lender can say, yeah, it's okay. We'll just transfer it over as a property tax.
Oh, because
Now,
some
now
lenders
their clients can get a better price on the home, most likely, right? Because they can get a little bit deeper discount on the home, right? But if you're taking on the loan as a property tax, then you're going to have a discussion, right? It's all a negotiation. I'm a real estate agent as well for the last 10 years. I've done these. I've done probably, I don't know, 10 PACE loans. Almost, I think two of them transferred, two of them, or the rest of them basically paid off, just rolled it into the loan.
Yeah, I
Right?
think most of
The
ours
escrow.
we just financed it into the loan.
Yeah, exactly. Yeah.
Made
So
it
it's
pay.
up to the lender whether they want to do it or not. Okay. It's not up to the homeowner bringing a lender, right? Because the lender's taking on the liability, right? So this is a good one to tell your folks to take a picture of, um, because this is basically what's needed for a loan, a homeowner to have the requirements to get a PACE loan in California, right? I told you about the ability to pay. When we're putting in the application, you put in the application, it's really quick, 1, 2 minutes to put it in. You don't want to, and we give you the option to upload documents. I always tell everybody, do not do it there. First off, it only uploads one document. So it's kind of a pain. Most people are going to have multiple pages if they're uploading stuff. Uh, so I always tell them, put in the application first, worry about the uploading after the applications and get the underwriters working on it to get that preliminary approval that we want to see, get them working on it, and then upload the documents to that underwriting email. And once again, I'm going to send you some handouts you can give to your folks for the 6 ways to NTP, fastest ways to NTP, or 6 steps, excuse me, plus our rate sheet. And the rate sheet will actually have this on the top of the rate sheet too. So they don't have to take a picture, but when I'm doing them in front of people, I always tell people to take a picture of this one. But ability to pay is exactly that. We look at their credit report. So we pull their credit when they submit their application. We look at their credit. We add our assessment. Say it's $200 a month. That's $2,400 a year. Add it to what they owe per year. Say they look at their credit and it's $30,000 they owe every year, and then 2,400. So we're at 32,400 is what they owe. If they make 32,401 in income, they're approved. It's easy as that. Okay. So $1 over, you're approved for your ability to pay. The credit piece is approved. Then we look at the mortgage, 6 month look back. You can have one late only. Bankruptcy, we look back. You can have a bankruptcy, but it's got to be discharged for 2 years. If it's discharged for 2 years, it's most likely at least three, possibly three, but most likely a 4-year-old bankruptcy at minimum, because it takes about a year to 2 years to even get in front of a judge to get it discharged. Okay. So probably 4 years old, but we can work with it if they have one. If it's not 7 years gone, right? 7 years, it's cleared. But 4 years, we can work with it. Property taxes, that's how we collect our payments, guys. So we're gonna look at that. One late in the last 3 years. Liens and judgments, if anything under $1,000, we don't care. Over 1,000, these rarely come up, but if they do, it's, sometimes there's $15,000, $20,000 lawsuits that they lost and they're against them. So if it's a lien, because they're not paying it against them, we're not probably gonna, unless they can pay it off, we're probably not gonna do a deal with them if they have a big lien like that. Foreclosure notice of default, none in the last 3 years. Pretty basic. This we don't need. Do your questions on things we do. Obviously, some of the more popular: renewable energy, thermal, PV, energy storage, anything to do with solar, energy efficiency, HVAC, ductwork, attic insulation, door insulation, windows and doors, lighting fixtures, full house rewires, full house repiping, for landscaping, plumbing, things like that.
Can you do ground mounts, or does it all have to be on the
Yeah.
home?
No,
Okay. And then can you do structures that have solar on it?
You mean like doing a carport? Yeah, if it's 100% solar carport, but just to build right now on patios, we're not doing, but we tried to add patio covers at the beginning of this year and they nixed the idea. So we're still in discussions with our tax authority about it to allow us to do. We added concrete this year and we were adding patio covers and they said, no, hold on a second. We need to have discussion about that. So still in discussions, so that I'll let you know as soon as I know on that. For right now, I would say the answer is no, don't sell patio covers, but we can have a discussion about it and I can bring it up and see where we are at the time because it might get a green light here soon. All right. We talked about different types of homes: primary, vacation home, rental home. As long as you're not talking to the renter or the leasee, we need to talk to owners, right? When you put in the no before you go, it's going to tell you who the owners are. It's going to give you a value that we think the home's worth. And it's not the exact value we use, but it's close. And it's also going to tell you the name of who the homeowners are. So if you're not talking to that homeowner, you need to say, hey, Bob, I see here it says Julie is the homeowner. Who's Julie? Oh, that's my wife. Okay, well, she's actually the one who has to put in the application, and she's the one we need to have her income because she's the homeowner. Do we do contributors? Not right now, although we are adding spouses. So spouses will be allowed. It's just not yet. Hopefully within this month or the beginning of next month, we will be adding spouses and significant others as contributors, which is great. We're excited about that. But they will have to be added to the application as a non-title contributor. Okay, so they will be added because we have to take in their debt too, right? We have to look at their debt because they're contributing now, right? So it only makes sense. So we'll be pulling their credit. All right. So once again, homeowners on the spouses or significant others, we will be able to add them. It's just not right this second, but hopefully by beginning of next month. Ownerships can be trust, LLCs. We talked about it. Articles of incorporation. That's what we would have to look at on LLCs to ensure that the person putting in the application is the owner of the company that owns the house, right? The residence. All right. Let's see. Any questions on any of that? Now I'll go ahead and show you the portal and some of the things I'll be sending you. 1 second.
I noticed on one of your slides it said you had a script. I don't know if you have that available. So
we do. Not a script, but we have that. You mean a welcome call script?
Yeah, I don't know. It said something about reaching out to homeowner farming or something, and it said you had a script.
Well, we have this. This is the script for you if you're not a script, right? It's not a
Yeah,
script.
a
But
process.
this is the steps, right, for you to run an application.
Okay.
Okay. For anybody selling, especially remote, you could have this right in front of you. You're checking the address eligibility, so we can kind of go through this real quick. Boom. Okay, here's your portal. You click in. Up, and this has a two-factor authentication. Put that in real quick. Let me see here. Excuse me a second. 1545. Okay, so this is a portal. Once again, you have to have a portal entry. So folks out there who don't have one or not sure they have one, get a hold of me and I will add you to the portal. Okay, valid. Okay, so here's our portal. This is what it's going to look like for everybody. I'm going to go ahead and we have an address eligibility. That's your know before you go. You click on this. Hold on, I'm clicking on it because I'm going to do it as a demo. Calculator or proposal tool. It's right here. And then you can start an application right here. Pipeline. Anytime you look up a property in your eligibility, it's going to show in your portal, right? So what's great about that is you can look up as many properties you want and they'll always be in there. So you can, when you decide you want to send them an application, click on it, it'll pull it up and you can send them an application. Okay. Oh, so let's go ahead and set this up as a demo so it's not live. Eligibility on demo. Okay, so this is what it looks like when you click that eligibility. It's going to go to this page and yours will be set up to power. So you won't have to put in anything here. It'll automatically come up like just showing the address eligibility. So you guys could get, anybody have a California address you want to give me? I can put it in or I can put in one of my own. Doesn't matter.
31273.
What's that?
31273.
Three.
Tessera Court, third one down.
Your house.
Oh, there you go. It's in Menifee. So Menifee is going to come up. Most likely it's going to say no good. So this, guys, this is good that we're showing this. It says check another address. If it comes up like this, like I said, the 15 WR cog Western Riverside, there's not a lot of paste in that area. There are air pockets because we are strong and we are in unincorporated Riverside. So outside of the 15 corridor, heading east, we're very strong, right? And there's pockets that are unincorporated incorporated Riverside in Menifee, Temecula, and areas like that. Okay, so you can see that that would be a no-go, so no point in talking about it. So I'll put in a San Diego address real quick that I know is good because I used to live there, and we'll put it in, and we'll click on it, and it'll pop up and you'll get the check mark. If you see a check, you're good to go. Like I said, it's nice to know before you get in there because then or before you talk to them, because then you could say, hey, you know what? I'm not sure I can get that. I have this type of financing. It's a great product, but I'm not sure I can get it. But let's check real quick. And that gets in their head and they start thinking, hey, why can't I get it? Oh, well, wait a second. And then you say, oh, great news. You can get it. We have it available for you. Oh, wow. Good to hear. Okay. And you see it has the address and it has the ownership, two names, and it has the amount. Is it the exact value that we use to determine how much we can loan? No, but it's close, somewhere in that realm, right? As a contractor, I look at this and I always think 10%. I tell contractors, think 10%. And you say, why 10%? I thought it's 15%. Well, it is, but you have fees and interest rolled into the loan. And who knows what equity they have. But if they have 10% equity, or 15% equity, if they have 15% equity in their home, we're golden. Anything over 15%, we don't have to ever talk about equity because they have enough equity. Because we can only get 15% of the equity anyway, right? So 15% we're golden, but 10% is a good number because you look at this and you go 94,000. It's an easy number to figure out. 94,000. Hey, I was going to do an $80,000 system. So this leaves me plenty of room. I think I'll have enough money. At least right now, I'm feeling good about it, right? I don't know. I haven't put in an application yet, but I'm feeling pretty good about it. Okay, so we know that Will and Mal are the people we need to be talking to. If we're talking to Bob, hey, Bob, who's Will and Mal? Oh, those are my parents. Oh, so your parents technically on the home. They may say that, hey, I'm on title. I swear to you, that's wrong. That's fine. Then we'll put in an application. We'll add them. But we're also going to have Will and Mal on there, right? Because then that would mean 3 people were on title. Okay. So we hit the next button. And this is the actual start of the application. Okay. Great thing about this, because they're working remote, you can either take the application as the first page of the application, fill application out now, start filling it out, and boom, you're done. You do your application, you're done, right? Or you can fill out just this first page and send it to one of the people on title. In this case, it's going to be Will. We'll put in his email. We'll put in a fictitious email, Bob. I'll use Bob again. Bob@gmail.com, fictitious phone number, fictitious project cost. Let's say it's 50,000 because we're doing batteries nowadays. So 30,000 would be a pretty small system if you're adding batteries, right? So 50,000, and you could start fill application out now and start putting in your application, or you can just press this, send applicant. And most of you people are working remote, you're going to send an applicant anyway, right? I get texted on that. So I got a text just right now, which is great. I am aware of everything that goes out on my contractor. So you send in, you put in an application, you send out an application to fill out. I see all that. I see everything happening along the process when application gets submitted. The back and forth between homeowner and the underwriters, right? So I see all that so I can be involved. I'm going to be intimately involved, especially if you're using us once in a while, not that often. If you use us more often than not, you might get to a point where you're doing it on your own. That's great too, but more likely I'm going to be helping out. So you can see, we started the application. You have the line. You guys will only have it up to an NTP. You won't have the funding and post funding, because as a salesperson, your job is to get it to NTP. Somebody in the back of the house usually takes care of the funding, post funding part. Okay. And then we could either send it, we just send it. You can see that when we send it, it says credit application form sent to applicant. Or we can fill it out now. We just go to the next page. Boom. And this is going to be, it's going to give you a project ID. You can write that down or take a picture of it, annotate that you're going to need that going, moving along, that 7-digit number. It's always easy to put that in subject lines when you need to send it. Homeowner needs to send anything in, or you are helping them out, send in something. You put that in the subject line, snap a picture of whatever they send in for income docs, and boom, done. Okay. In the application process, you have the option. Okay, let's go back to here. So we checked eligibility. Boom, we were approved, or we were okay in that area. Now we submitted the credit app. We're submitting it right now. We're looking to get a preliminary approval. And then once we send in the income docs, we're trying to get a final approval. So put in the application now and then work on the income docs. Like I said, I like to get the underwriters underwriting it right now, send in the income docs afterwards. You're welcome to do it because you're doing it remotely. You can do it if you have their income docs already. Great, take care of it. But most likely you don't. You're going to put in the application, or they're going to put in the application, and maybe they're putting in the income docs. That's up to them to decide. Or they can just wait till afterwards and put them in afterwards like I do. But in-home, anybody that's doing in-home type sales, I always recommend get the application in as fast as possible, because it's time, right? You don't want to keep them waiting. You want to get it in fast so that the underwriter's working on the file. But then we're going to submit income docs. We have a secure bank button. Okay. So we went to the next page, fill application out now. That was right here. Here's our second page. And you can see the credit application shows the number of people in household. Do they live here? Do they need to? No, doesn't matter if they do or don't. If they don't, we're asking for their address because we send hard copies of everything. That's the only reason why. You can see it shows first and second applicant on here. If you go into the application and there's only one applicant, let's say, one's deceased, when you go through this, you can delete people off the application. It's not a problem. Or you can add people on the application if there's more. As we move along, you'll see those. Okay, 1 second here. Okay, children, guys, act as if they're ghosts. Don't put children on here. I don't care if they have 10 kids running around. It takes away from their ability to pay the loan. We don't want to do that, right? Just go with the adults. And I don't mean the adults living there. I don't care if there's the adults, go with the people on title. If there's 5 people helping pay the bills, don't put them on here. They're renters, right? They're not part of the application. They're just renters. Okay, moving along. This is what it looks like for everybody on title. Has this one quick page. Their name is going to pop up automatically, most likely. If not, put in their name. You can always add somebody at the bottom down here. There's an add button if you want to add more people, and it'll give them a similar page, same page as this, a new page for them to add themselves. But all we ask for is their full social. We have a fictitious social, their birth date. Let's put in a fictitious birth date. Okay, the phone number will pop up because it's already info's in. The email will pop up, info's in. If not, for the secondary people, it won't. They have to add that info. But for the first person that will already have the email. Income, we're going to add their income. Let's say they make 70 a year. And then here's the uploader. If they want to upload, they can do that if you send it to them. But if you're doing it with them on the phone, once again, I just get in the application super fast and then say, hey, Mr. and Mrs. Jones, now here's an email. I want you to send in this. What do you have to send in to show income? We do have an option for people that are tech savvy and have online banking. You can press this button, send a link, and it's called the Plaid system. You can see that the link was sent to the customer successfully. Boom, just went out, and they can link on their phone their bank account to it. It looks at all their deposits over the last year. They get an automated approval. They're done. That's the best way to do it. You can push people to use this. Some people don't have online banking and can't do it or are not tech savvy. If that's the case, we're going to go old world way, which is email, which isn't that old world, but we'll call it old world, right? 20 years old world way, right? As far as this stuff, I never put it in. They're welcome to put it in, or you're welcome to put it in, but I don't do it. And then I go to next page. Once again, there's a second person. For sake of time, I'm not going to do it. If say they're deceased, say Mal's deceased, we just press remove at the bottom. Boom, we just removed them. Once again, if you wanted to add them, there was an option to add too at the bottom of the first page. Okay, boom. So you see there's the first page. If you wanted to add them back or add more, you could add there. Go to next. That's it. That's the application. The application is very simple and easy. Here's the things we don't do. We don't do reverse mortgages. That's going to be usually elderly people, right? For manufactured home and mobile home, can we do them? If they own the land underneath them, in other words, not in a mobile park, that they lease the land. So they have to own the land underneath them and they have to be on a concrete foundation. We can do manufactured and mobile homes. Okay. You say, hey, you said you don't have a reverse mortgage, Mr. and Mrs. Jones. No. Great. Are you good on your mortgage? Everything's good. Only one late in the last 6 months. Great. How property taxes? You pay your property? Yeah, we pay those. We were late one time 2 years ago. Okay, you can have one late. That's fine. Hey, we're going to do everything through email and DocuSign, but California loves regulations. They require you sign this quick form. I'm going to send you a form, or Home Run's going to send you a form. Print it out, please, and then just print your name, sign your name, date it for each of you if there's 2 of you, and then snap a picture and send it in on the email that's on the form. It really is. All it's saying is that you're okay and you're comfortable doing everything through email and DocuSign, which you've already done at this point, right? Once we send this through, we submit credit app. Boom, I consent to, they're consenting that they're okay with this soft credit pull that's not going to show up on their credit report, other than a soft credit pull and against their debt. And we're going to check their title. You're good with that? Yes, good. Submit. Boom. It's that quick, that easy. Okay. So you've submitted your income. Now you're going to submit income docs. If you did the bank button, great. If you're not doing the bank button, you would be doing this. Underwriting, sending something there. If they have a traditional job right now, everybody has W-2s laying around, send it, take a quick picture. It's a one pager, send it in. If they have a pay stub in the last 30 days, send that in. We don't need all this, guys. You either use the bank button, a W-2, pay stub, 2 months most recent bank statements. We don't need the whole bank statement. We just need to see the first page and the deposits page. So 2 pages for each bank statement. Or once again, we talked about W-2 or a tax return or benefit statements. Some people have Social Security, anything to show their income. One item. We don't need all of them. Two different homeowners might want to be part of that. They might show two different types, ways of showing it. That's fine. There might be three title owners on title, but one person just shows the income because they make enough to cover the income for everybody. So why show the other people's income? That's fine too. Send in the one that makes the most money, their bank information or their pay stub or their whatever. That's fine. Everybody does not have to show income because they're on title, just if we need it. Great thing is if we put in one person and they come back and they say, approved, their income's approved, but we're shy $10,000 for income for annual income to get this project through. Guess what? We're going to find more income. We're going to add a spouse, or we're going to add somebody that's maybe somebody on title didn't add their income information. We're going to ask for their income information because we don't have enough to get approved. We're always going to tell you what we need, how much we need for them to get approved. Okay. Then we get a final approval. While we're doing this, sending in these income docs, we're going to get a prelim approval. The prelim approval goes to the homeowner. You'll be notified there's a preliminary approval, but you won't be told how much is available. That's where we have built rapport, hopefully, with our homeowner. We'd say, oh, great, you got a preliminary approval. How much did you get? Did you get enough for our project? And they'll say, yeah, I got 80,000. We only needed 40,000. Well, guess what? Now your wheels are turning. Maybe you've talked to them about some other upgrades or add-ons that you wanted to do with this project. Now you can upsell because you know they have more money to work with. Once we send in the income documents, we're going to get final credit approval. That's what we want to see. Final credit approval. Once we get final credit approval, we're going to go ahead and do our drop down, right? Which was, I won't go ahead and send this because I deal with it, but you'll see contract page. You'll hit that. Oh, you know what? Let's go ahead and send it. Okay. We're going to submit this fictitious project. Boom. Close window. It's a demo project. And now we should be able to have access to contract drop down page. Right here, contract. And you'll see this application will come up green now. That's when you get final approval. It'll be yellow otherwise until you get the credit proof of income, in. That will be yellow, but it will turn green as soon as the credit is approved. You can hover over it. It says credit approved. Then you go to contract page. Here's your contract page. It's real easy, guys. That's our contract page. It says paste, put the name of the person. Let's see. Let's show Emily. Let's see. Emily Bud. And then you'll have your drop down. Most likely you'll see our 949, and then it says HO and a number next to it. The number is percentage, 23%, 16%, 10%. So $799 costs 10% to the homeowner as a fee that's upfront, open, where they can see it on the loan and the financing portion. Remember, you're just bringing us the cash price. We are inserting that as your cash contract price into our contract. So you are going to be putting your cash price in here. Okay. So we're going to go to Most likely you're going to do a 599, try to get the lowest possible, 30-year. Okay, improvement type, you're going to put something like solar modules. That's how we do solar modules. If you're doing a roof work underneath, you don't have to, that will just be incorporated into this price. But if you're putting on a whole tear off, that will be a separate roof. Okay, you would put roof. That's if you're pulling a permit for a tear off. If you're pulling a permit for the roof, you would be doing this as a separate permit. Okay. If we were doing an MPU, you put main panel upgrade. So everything's broken out. You will never go over, most likely, on our 750 a watt, I think our max is. So you'd never go over that because it's all broken out, right? Unless we were doing like a ground mount or something like that. Yeah, then you'd be close, right? So you just put in the amounts. It's gonna, let's say it's watt. Let's say we're doing a 10,000 watt system, 10 kW. Okay, cost, you put in amount, whatever, 30,000, $3 per watt, right there. Right? You could be doing up to a 60,000, $6 a watt, right? And then you put all them in there. You can validate, you check, you hit this, and we're going to go ahead and delete this just for time's sake, guys, because we got to get going here. Press validate, and you can see total cost 60,000, total assessment amount. That's with our fees, interest, the fee for the buy down, everything. Really, this is what this is, and this is what they're paying per month. This does not have anything to do with ITC once again, right? One sec here.
Wait, that 5,000 was, where's the payment per month?
Right here.
Oh, okay.
484 per month, right? Or an annual assessment twice a year. If you're paying twice a year, you're paying half of that, right? Half and half for people who own their home outright or pay twice a year. Or if you want to do this and defer till November as an impound person, you can do this times 6, right? So basically, it's close to $3,000 in November before December 12th, right? That's if you were doing an impound and you wanted to pay half that balloon payment we talked about. But otherwise, in July, most people are going to have this. Now, in the first year, they might be paying this, but during that first year, they're going to take that ITC, say they start paying this, and they get that ITC back, and they want to reinvest it. So in the first year, most likely, you're going to pay this number, right? But in the second year, you're going to pay whatever that secondary number is. But it won't be on this is our contract we send out. So that won't be in there. You would just go to the calculator. And I'm not going to get too far into this, guys. You're going to have access and you can play around with it.
Yeah, Matt, we're gonna have to cut this. So this is so really in depth, but we're gonna have to
Yeah.
cut it down here. We're a half an hour over.
Yeah, yeah.
Hey, I've got a quick question for you though. So who handles the maintenance? So panels go out, module goes out. Who does a homeowner call then at that point?
The homeowner called by our home base. Yeah, the
Okay.
underwriting and the customer service call to do the welcome call and the
No,
complete.
no. During the process of the loan, so Pace or Home Run Financing has the loan on it. Who handles the maintenance of the?
That's between we call out and we handle it, but it behoove the whoever's doing the loan to be party to it, right? To be, and I'll be in contact with them so we can all kind of keep an eye on it to get the thing moving.
Well, it would
But
just be like a
we're
standard.
constantly we're
No,
constantly calling out.
Okay, so 2 years into it, all right, 2 years into this loan or this Pace, my solar panels they're not producing. Need a new
That's
inverter.
nothing to
What?
do with us. That's the installer. That's
Yeah,
power.
that's just through power because it's just a standard
We
loan.
don't have anything to do.
It's
All we're
not,
doing,
it's not TPO.
yeah, all they're talking to us about is making extra payments. Say you're going on with a loan. If you want to make an extra payment or you want a payoff statement, how much do I owe? What's left?
So
No.
in this, would
We
you
call
put
up.
the power care?
Yeah, you can probably put the extra warranty on it because just that through the
Okay.
smaller.
Yeah,
Okay.
as far as anything to do with the system itself, that's nothing to do with us. We
Okay.
are financing only,
Got
right?
it.
So, and we don't even really deal a whole lot with calls about the financing because once it's going, it's done through their property taxes. The only time they call us is when they want to make a extra chunk payment towards the principal or they want to pay it off completely. Then they're calling us. And a
Okay.
lot of times, like when people are selling their home or refining their home, the agent's calling us, right? The real estate agent or the mortgage agent is calling us for a payoff statement or a pay down statement. Those are the people we generally talk to. The homeowner doesn't call in that often to us really because they're paying as part of their it's part of their mortgage now, right? So there's really no questions. They just know how long it's going to be there. Like I said, they're calling us for payoff statements or when's it going to be? How much do I have left? I've been paying this for 3 years. What do I have left? I want to pay it off now. That's the
All
only
right.
time they
Got it.
really contact us. All right. But
Cool.
everybody has my number once again. Let's go back to the initial page on that so that you here's the rate sheet. I'll be sending out this rate sheet to everybody. I'll be sending out this and you guys can disseminate this information. Our opt-out form I told you about, I will send them you guys this. And then here's leave behinds in Spanish and English, where it's just a little bit more information on what home rent is and a pace. Okay. I'll send that out to everybody.
Okay,
Well, this was
awesome.
I'll send it to
great
you guys.
information. Thank you so much.
You're welcome.
And if anyone ever has a question about home
Call
run
me
financing, we can send them to this YouTube video and it'll answer any question they
and
have.
then send them my phone number. Right.
And your phone number. Yeah,
Yeah. Make sure once again, my phone number is the most important thing.
yeah. Yeah.
I take calls all the time. I have
Your
no.
phone number will be on the video too, but we'll put it on the
Yeah.
description.
Make sure everybody gets that. And if they want to get in the portal, they've got to get a hold of me.
Yeah,
That's
yeah.
most important probably.
Get
Okay.
registered. Okay.
Okay.
Hey guys, I
Well,
appreciate
thank you, Matt.
Thanks for your
Thanks
time.
for
And I'm looking
joining
forward to
us.
getting calls.